Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for July 31st. My name is Will Pauly and I'm here with my co-host David Blake. David, how are you doing today?
Good, Will. Thank you.
Well, without any further ado, let's move on to the market. David, can you give us a look over the market letter from last week?
Yeah, let's go here on the home page, pull up Unfriended. We had a busy week last week. We had a series of winners and losers on the earnings front. We had a big sell-off in some of the high-flying technology stocks that we watch, the Facebooks and Twitters. We had decent economic data. We had a great GDP for the second quarter, came in at 4.1%. And that was offset some by ongoing slowdown in housing data, which we're blaming on some a little bit of rising rates and also on low inventory. And we had energy and financials and industrials materials. They outperformed, while the leading sectors from before, technology and consumer discretionary, finished the period lower. The technical conditions of the broader market improved somewhat last week. As I mentioned, the last couple of weeks, we're still getting conflicting signals in the Nasdaq and Russell 2000. Now, the Nasdaq remains in its upward channel, which we'll look at in just a minute. However, it has pulled back to the top of that after making a new high just last week, actually. I think it was on a Wednesday or Thursday. But the negative divergence that I've been talking about actually hit that index along with the Russell 2000, which is also where we pointed out the negative divergence in last week. We saw those two come down. The Russell 2000 actually has now broken below its 50-day moving average, which is a little bit of a problem going forward. And what we're seeing a little bit is a little bit of a rotation coming out of like I said, the high-flying tech stocks and also some of the consumer discretionary stocks that have led the market higher. And I think what we're going to see here going forward is a more conservative approach to the market. Part of this is due, we have some industrials, we're seeing a roll over into that. Part of that is because of they've been held down by the trade talks with China and Europe. We got some conciliatory movement in Europe last week, but China is still playing a little bit of hardball. Although today's rally in the market is due somewhat due to China saying that they're open to some progress in trade talks. They want to get back to the table, so that's good. If you remember, we have a look at the CTI went down from a 10 to a -4, which means that we're getting towards the end of the cycles. A and B are both negative right now. Momentum is still positive. Sentiment still a little bit bearish. We still have too much positive stuff in the broader market.
All right, David, thank you. Can we move on to the market recap section?
Sure. Well, hold on one second here. I'll go through the stocks. Put that on. I'm sorry, the home page. My bad. Okay. We'll hit a market recap. We're also seeing some negative divergence in these numbers. Come on down to the bottom here. First thing I want to look at is the AD lines. The advanced decline lines are not what you want to see in a good, healthy market. Now, as far as the new NYSE, we did make a new high, I believe, on Wednesday of last week. Now we're kind of giving it back. It kind of goes sideways here for the last couple of weeks. You'd like to see that like in this section where you see a nice uptrend. The Nasdaq, as you can see, has really been declining. In fact, for the whole month of July, which I think started right around here, I think we actually may be down, have a negative AD line for the month of July. Not what you want to see in a healthy market. In addition to that, a little lower on this thing, you're going to see the new highs and new lows. Very anemic numbers, even on the NYSE. So that you were just about even the other day. Today it's, I think today's a little bit better. But look over here at the Nasdaq. You've now gone where the new highs are trending below the new lows. Not something that you want to see in a healthy market. Again, this is negative divergence to the market, pushing up to new highs, and I think that it's a bit of a harbinger that we're going to see some lower prices going out over the next few weeks into August. That's traditionally a rough month, and what what you may now you're getting a nice bounce today, not only on the trade talks with China, but also this is the last day of the month, July 31st. You also have a lot of window dressing from the money managers and portfolio managers that tend to give it a more of an upbeat feel the last day of the thing. So, and just to wrap that up, the negative divergence that points to weakness in Nasdaq and Russell 2000 is still out there. I think that's a precursor that the rotation from those high-flying stocks into more multinationals and industrials. I also brought up financials, that I thought we would see some higher prices in financials, but I'm going to come up with something. We're going to call that the Charlie Brown trade. I don't know how many times the financials are going to start to show some life. Interest rates start to go up on the 10-year yield, and then all of a sudden they just pull the ball away, and we start to see weakness in that group. The inversion of a yield curve has correctly called it a recession every time since the 1940s. So that's something we want to keep an eye on. But this Charlie Brown trade with the financials, if that 10-year yield keeps moving down and we start to get an inverted curve, the financials aren't going to become the leaders that we want them to become for the market to move higher. The last thing I want to mention on that is that we also have in the market letter, just so you can see a rotation in this also with the strongest industry groups. Last week, the strongest groups were medical supplies, health food retailers, beverages, and not health food retailers, it's just food retailers, beverages and household products non-durable. Those are the consumer staples. Weakest were oil field equipment, aluminum, banks, Eastern, and also Internet Financial. Internet Financial makes most of their money from the spread where they make loans and pay out interest, and also what they can charge on margin. So that's some things that we want to be aware of, especially that rotation that we'll talk about more of that a little bit more this Friday in the letter.
All right. The last couple of weeks, we've been talking about negative divergence in the Nasdaq and Russell 2000, and you've correctly called the top in that side of the market. Are there any other sectors or areas you see a problem with currently?
Yeah, I do. Let me run to the charts real quick on this. For those that didn't catch the last week or two of Tech Talk, let's pull up the Nasdaq right here. And when we talk about negative divergence, what we mean is that we see the stocks market making the stock or index making a new high, as in here, and then you make another new high. However, the indicators don't confirm that. We had one back here again. Market made a new high. The RSI was up in the 80s. It made another high over here. Maybe we had slower momentum, and the RSI 14 days only up in probably around the 65 or so. So that's what we look at as negative divergence. I've noticed also in a couple of the different sectors. I want to pull up a couple that I do see some problems. One of them that I see is probably maybe reaching its end here. First of all, this is XLE. This is the energy sector, and there's not a lot of negative divergence. Yesterday, there was one signal that I had as a red flag yesterday was we came back up to 70 on crude oil prices. We hit that and we bounced off of that again. We rolled back down today to around 68 and change. And I think downside, if we had a chart of oil, would show that we probably will go down and test support down here around 67.50 again. And if that happens, it could be, if it doesn't hold, we might see lower prices. Several reasons for that. If we start to see a little bit of slowing in the economy in the third quarter, if we go from 4.1 GDP down to closer to 2, that would show a little bit of a slowdown. And also, we're in peak driving season right now, where we should be getting big drawdowns in oil prices, so they go up, and we're not quite getting the pull downs in that. Now, some of the other sectors I do like XLB, which is a materials sector. We recently broke above the 50 and 200-day moving average. Momentum is bullish. That area looks higher in the market. Here comes the Charlie Brown trade again. Here's XLF. And this is the financials. And although we're seeing some positive momentum, it's starting to slow over here. And I want you to be aware that we can't get above this area here. You have a bit of a descending trend line. That we rose above that. We broke above that, but you got to kind of keep an eye on the yields. And as the yields roll over, I don't have as much faith in this. I think we might see lower prices in XLF. We're down over 0.5% again today. So you're going to come down here and see, come down here at some point and test this 100-day moving average, 50-day moving average. Like we've been saying all along through the year that if you're going to go in the financials, don't buy the breakouts, wait for the pullbacks and go into them on that. Now, here's another example of negative divergence that I wanted you to see on the XLK, which is the technology sector. Okay, over here we see the thing making a new high up in this area, and you're up here around 70 or so on the RSI. Now we've made a new high over here, and we only got up to about 65 or so. Not big negative divergence, but it is something that you should have been aware of as we look at that. Now we're having a pullback down here where the technology sector is broken below the 50-day and the 100-day moving average. Not a good sign. I would look to see this after today. Of course, you may get a bounce tomorrow depending on Apple's earnings that come out tonight after the close. But if Apple disappoints too, then you're probably looking at a retest of this area down here of the June lows. And that would be something to keep an eye on. It might be at that point where you may want to start to nibble away a little bit on that. Okay, I like XLV. Looks good. We don't need to look at that. It looks higher. There's some volatility in that as far as biotech goes, but the pharmaceuticals look like they're outperforming. AD line is real strong on the healthcare XLV. Another sector that we're seeing rotation going into that looks really good here is industrials. We had this rated along. You're seeing this group in here. This is as trade talks begin to progress. We're seeing this thing move higher. It's up today. Again, just on the fact that China said, okay, we may have some talks. You have the industrials up about 2% today. Caterpillar had a big jump. John Deere had a big jump. That's going to take out this little topping pattern that we've run into over here around the 77 on the XLI, and that is something that we want to keep an eye on. XLY, which we talked about, one of the worst sectors last week, one of the worst performers. Okay, negative divergence. Okay, here we are over here. We made a new high. We're up here around 82 or so. Okay, we come over here making a new high on the XLY. Gee, we're all the way down to about 50. That's horrible negative divergence, and we're seeing distribution in that sector also. I would use like today's rally to start to pull off some of these high-flying retailers, and there's some especially retailers that have had this big run up here since early April. This negative divergence is a pre-warning that we're going to get more conservative growth areas, which will include XLP, which is consumer staples. We saw in the best industry groups, household products, non-durables was one of the top industry groups on that. XLU, another group that has been, we had a couple questions on actually about this, is whether we should be moving to that. I think you're probably about where you're going to be on this. Here, again, negative divergence. Here you started to make a new high in this little group here. You're up around 70. We're over here trying to make a new high, and you're around 55. I think with the utilities, you're probably about as high as you're going to go on this little go-around here. I see sideways action, especially if the 10-year kind of goes sideways and trades between, say, 2 3/4 to 3 in that area. I don't see much potential on that. Something I do see more potential in is if you're looking for a little bit of yield with some growth opportunities would be the REITs. The REITs over here, we've had a nice run up here, higher highs, higher lows. You've had a little bit of a pullback in here, but they're up about 2% today. I think with inflationary numbers that have been coming in, the REITs would offer you a little bit of growth, plus they're going to offer you a nice yield on top of that. Don't be lured in with the big yields. Look for some REITs with growth potential that may be only paying about 4.5%, 5%. Because if inflation keeps ticking up, this sector, like I say, will give you some growth and some nice dividends.
All right. We've had some customer questions about arrows in our charting package. Can you give us a short overview of what's going on there?
Yeah. What they're referring to is down here at the bottom of the charts. As you can see, we have these red and green arrows. These represent technical events that have happened over the last week, last month, or whatever. And when you start seeing a stock where you're starting to see these things down here at the bottom, and you start to see, well, let me get something that's a bit more volatile here. Let's look at, let's go with Facebook. How about that? Okay. Well, I don't want to see this one. We'll look at something else here. Let's look at PFE. Let's try this. Okay. Okay. Here's an example of something. Here's Pfizer. As you can see with all these green arrows down here, we tell you what the technical event was, and as you start to see more and more of these coming in here we've had 1, 2, 3, 4, 5 technical events during this period. That's kind of telling you that technically the underlying indicators are getting very bullish on this stock. As you can see right now, we're heading towards new highs on Pfizer, and this is a precursor that things are happening good. Here you had 10-day simple moving average crossed above the 21-day. This day you had relative strength turn bullish. You're now outperforming the S&P 500. Here you had the up-down slope turned up, means accumulation is picking up on the buy side. Over here, MACD short-term turned bullish. Now, another place you can find these, if you go into stocks, and we'll take a look at Pfizer again. Go to the Technoscan chart. If you're not familiar with this, again, this is a more detailed report than the second opinion is. We give a much deeper summary about some of the different indicators, show you some charts. We tell you what's strong and weak over the short term, intermediate term. Pfizer, everything looks good on this thing. But one of the things down here at the bottom is where these indicators come up on the charts, and we actually do you can read them on this report here, and you can see what they've been all in one spot. Now, what I've noticed in the past, if I'm long this stock, Pfizer, for instance, and all of a sudden, let's say the next event is bearish, then we get another bearish event, but the stock's moving sideways to maybe even slightly higher, this can be a warning to you, and actually will give you a heads up that things are starting to break down just a little bit, and you're getting maybe some profit taking going on in that stock. And I will watch this a lot of times. It's just the same way. If the stock's been heading down, going sideways to maybe a little bit down, all of a sudden you start seeing a bullish indicator come up, or another bullish event happen. That's probably a good signal for you that stock has already hit a bottom, and you're going to start to see a rise on that. So again, if you go back to the charts and look at that, as you start to see these arrows come up, that just means there's some good things or bad things going on in the market. As you can see with Pfizer here, we've had 5 very positive technical events just over the last week or 2 or 3 as we go into earnings, which is another good sign.
All right. Well, it's come time to wrap up the show for the week. Remember, if you'd like your questions answered on the show, email them in to support@marketedge.com or live chat one of our representatives at any time from us here at Market Edge. Have a good week.